About what was moving the market today. Julia Lee joins us from Bell Direct. Julia, good to talk to you. Now, the Aussie share market gave back most of its early gains, but still managed to finish in the black just.
Friday, we did see a pretty good start this morning, and that was on the back of a lead from Wall Street, where we did see the Dow up by 0.7%. But as you can see from the intraday behind me, we lost most of those gains from the morning, the market closing up just 0.1%. Now, gold was an interesting area. Overnight, we saw gold prices looking to test that 1,000 US an ounce mark. It looks like in Asian trade there was a little bit more profit taking going on, and in fact if we have a look at gold stocks, they look like they've run out of puff. They had an extremely good session yesterday, but today we saw Lahey Gold as well as Newcrest Mining finishing flat. The key for gold is going to be those non-farm payroll numbers which are out in the US and a key for the markets. Probably one of the reasons why we did see the Australian market sold off before the weekend. Number one is the nervousness ahead of those non-farm payroll numbers. Now, the expectation is for a loss of about 225,000 jobs in the month of August. Also on the weekend, we see the G20 meeting, and markets will be watching to see whether there are any signs that the stimulus will be withdrawn, and then on Monday we see a holiday for the US. So all this combined added to a bit of nervousness on the Australian market. We did see the industrial sector, the best performing sector on our markets today. Leighton's had a great day, up by about 5%. Brambles up by about 3.5%. In the end, though, the market up by just 0.1% and a loss for the week.
Now, one story we've been following closely is all the speculation surrounding Consolidated Media.
It looks like the fight is on for Consolidated Media, so it does look like Packer and Stokes are ready to battle it out. Now, this fight really did turn up a notch back in July when Packer raised his stake up to 40.77%, and that was in retaliation to Seven increasing its stake just below that threshold where it needs to launch a full takeover, so its stake's at 19.9%. There was speculation that Kerry Stokes could use the creep provisions that allows a company to increase their holdings by 3% every 6 months without having to launch a full takeover. But it does look like the war is now on for Consolidated Media. Now, Consolidated Media, we saw last month selling its stake in Seek for $440 million, and then another $50 million for selling its Sydney head office. So it does look like the sale of some assets there. The next day we saw them launch a share buyback, and now it looks like Packer may be getting his war chest filled up to get ready for this fight with Kerry Stokes and with Seven. So it does look like Challenger. We saw that large parcel of shares going through 122 million shares, 21% of the company. Speculation there that Packer's getting his war chest ready for a fight for Consolidated Media. Of course, all this was great news for Consolidated Media's share price. We have a look at Consolidated Media. This is the week's trading. You can see that we saw a sharp spike up today.
Prime time viewing. We are on the sidelines watching that battle. I'm sure there'll be more on that, Julia, that we'll be asking you about. Just to another company in focus today, Babcock & Brown Infrastructure shares really coming under pressure after its market update.
So from a share that's performed very well to a share that's been the worst performing in the ASX 200 for this week. In fact, we've seen Babcock & Brown Infrastructure actually lose 23% for the week, and you have to consider that they didn't trade on Wednesday and Thursday, so that's in 3 days worth of trading. Now, they came back online after being in a trading halt on Wednesday and Thursday, saying that they do look like they have a cornerstone investor. Now, of course, Babcock & Brown Infrastructure has around about $10 million worth of debt, which is really a problem for the company. But while a cornerstone investor may help them with their financing situation, it's not good news for shareholders, because shareholders face a significant dilution in their assets with any sort of deal made with a cornerstone investor. Now, Babcock & Brown Infrastructure have been trying to sell assets to deal with their debt problems, but they're saying that it doesn't look like the cash that they would raise through those asset sales would be significant enough to deal with their 2010 maturities. So they're going to go with this cornerstone investor. Shareholders obviously not liking the solution or the effect it's going to have in terms of a dilution in their holdings. We have a look at Babcock & Brown Infrastructure. This is the week's trading. It was in a trading halt on Wednesday as well as Thursday. Initially a spike up, but then a tumble down for Babcock & Brown Infrastructure today.
Yeah, sure was. Julia, great to get your views on all the market moves. Thank you so much for that. Have a good weekend.
Thanks, you too, Brady.